Very good afternoon, people. Very soon we will start the lecture, just in a minute or so. I hope you have revised the earlier lecture. Okay, dear students. In the last lecture, we have continued with the chapter residential status and scope of income. Particularly, residential status was done, scope of income was started. What we have learnt in scope of income? If income is received in India, deemed received in India, accrued in India, deemed accrued in India, that will be taxable for all the three status, that is R&OR, RBNOR, NR. If business income accrued and received outside India, but control is from India, then it will be taxable to R&OR and RBNOR. If accrued, received, controlled outside India, it will be only taxable to R&OR. If any other income accrued or received outside India, it will be taxable to R&OR. And if past year income remitted to India in current year, it will be taxable to no one because it is not an income, it is merely inflow. Then we started with section 9, deemed to accrue or arise in India. Some of the points which are deemed that this income are accrued in India. First one was business connection in India. That if you have a business connection in India, that is like agents in India who is finding customers for you, then whatever is the business income through those customers will be taxable in India. Indirectly, if you earn any business income because of India, it will be taxable in India. But there were three exceptions. First, activities merely restricted to shooting of cinematographic film is not deemed to accrue or arise in India. Merely taking news and views from India, transmission outside India is not deemed to accrue or arise in India. Purchasing raw material from India and directly doing export is also not deemed to accrue or arise in India. Second one, if you have any property in India, if you have any source in India, whatever rent you receive, whatever interest you receive, whatever dividend you receive, whatever capital gain is arising to you, that all will be taxable in India. One point you need to remember, if there is a rental income is given, don't take 100% taxability, deduct 30% standard deduction. Further, if you render any services in India, then whatever is your salary income will also be deemed to accrue or arise in India. Then we saw if you are a government employee, you are an Indian citizen, you are working outside India, your salary deemed to accrue or arise in India. But there is one exception, section 10 clause 7. Allowances and perquisite paid by government of India to Indian citizen for working outside India is exempted. And this we will study in salary chapter in detail. From which point we are now continuing is interest. When an interest income is deemed to accrue or arise in India, that we are supposed to understand. See, if interest income is received in India, taxable to all the three. If it is deemed to accrue or arise in India, taxable to all the three. But if your interest income is not deemed to accrue or arise in India, it will be only taxable to R&OR, because to R&OR to global income taxable in India. So we want to fetch RBNOR and non-resident into the taxability, and that's why section 9. Now let us learn about interest income, because if you understand interest income, you will easily understand the further 2 points, that is royalty and technical fees. First, let us understand about interest. See, if there is a person called Mr. A who wants money and he is asking the money from Mr. B, and if Mr. B is giving money to Mr. A, can I say we will call Mr. B as lender and Mr. A as borrower? And for the borrowing of this money, Mr. A every year will pay interest to Mr. B. And now what we are supposed to understand? When this interest income is taxable to Mr. B, for a lender, when this interest income is taxable in India. So first we need to ask to this lender that by who is your borrower? Who has borrowed money from you? If the borrower is government of India, then yes, whatever is the interest income that will be taxable in India, it will be deemed to accrue or arise in India. Are you Elon Musk that government of India is borrowing money from you? So the simple answer to this, you don't need to be Elon Musk or Mukesh Ambani or Gautam Adani to give money to government of India. If you invest in PF account, you invest in PPF account, you invest in bonds, debentures of government, here government becomes the borrower, you become the lender, and government will pay interest to you. So if government of India is paying interest to you, it will be always deemed to accrue or arise in India. Second, who is your borrower? Any resident of India. If your borrower is not government, but your borrower is any resident of India, then you are further supposed to ask where this resident has used your money. So whatever money you have given to this resident, where he has ultimately used the same. If that resident person has used your money into India, either for business purpose or for any other purpose, we don't care. But if the money is used in India, to that lender, interest will be taxable in India. Why? Because the ultimate usage is in India, and because of India, this lender is getting interest income, and hence that interest income deemed to accrue or arise in India. But if that resident person has used the money outside India, can I say your money has nothing to do with India? It is used outside India, and hence this interest income will not be deemed to accrue or arise in India. It will not be taxable in India. So first of all, who is the borrower? If the borrower is government of India, interest is taxable in India. If the borrower is any resident of India and he has used the money in India for any purpose, for the lender, that interest will be taxable in India. If the borrower is, let's say, use the money outside India, then that money has nothing to do with India. That interest income is not taxable in India. Now, if the borrower is a non-resident of India, the borrower is a non-resident, then you need to ask where he has used the money. If he has used the money in India, then ask for which purpose he has used the money in India. Either it can be for business purpose or it can be for any other purpose. If it is for business purpose, yes, interest will be taxable in India. If that non-resident borrower has used your money in India for any other purpose, that interest will not be taxable in India. Now, this non-taxability is to promote to the lender all across the globe to give the money to the people so that they come to India, they invest in India without the fear that our interest income will be taxable in India if this non-resident use the money in India. And that's why we don't want that fear into the mind of lender. We want them to freely give their money to any non-resident just to invest in India so that funds came in India. And that's why we have exempted those lenders if they give the money to any non-resident of India to invest in India, either in stock market or in properties or whatever. But if they are giving the money to that non-resident for doing business in India, can I say it will give harm to our local businessmen? And that's why we have done the taxability over there. That then interest income will be taxable to that lender because we don't want outsider to come in India and do the business. For that, our local businessmen are enough capable. We want the other non-resident to come to India to invest in India. And because of that, if lender is giving the money, we will give exemption. It will not be taxable. But if this non-resident has used the money outside India, anyways, India is not into the picture, that interest is not taxable in India. So ultimately, what is the conclusion? If your interest is paid by government of India, it is always taxable in India. If your interest is paid by any resident, that is borrower is any resident, and if he has used the money for any purpose in India, either for business or for any other purpose, that interest will be taxable in India. If that resident borrower has used the money for an outside India, that interest is not taxable in India. If your borrower is a non-resident and he used the money in India for business purpose, to that lender, interest is taxable in India. If your borrower is a non-resident, he has used the money in India for any other purpose, then to that lender, interest is not taxable in India. Similarly, if the borrower is a non-resident, use the money outside India, again, to that lender, interest is not taxable in India. I have written the same provision over here, but in line format. So interest on money borrowed, deemed to accrue or arise in India. First, interest paid by Government of India taxable. Interest paid by resident person used the borrowed money for any purpose in India taxable, deemed to accrue or arise. Interest paid by non-resident, he used the borrowed money for business या profession in India. Business या profession in India. Then it will be deemed to accrue or arise in India. If used for any other purpose, it will not be deemed to accrue or arise in India if the borrower is a non-resident. Okay. The simple line format is there. Over here, I have presented in a chart format. You can just note it down quickly. This chart format you can note down somewhere. So always prepare one notebook for my subject. Whatever extra examples I give, whatever this kind of summaries I give. So if you want to write it, you need to prepare a small notebook and you need to copy over there. Just take a screenshot either or note down it quickly. Giving you 1 minute for that. Okay. Now I have written one example over here based on all whatever we have learned up to now. And based on this example, you need to tell me for that lender, interest income deemed to accrue or not. I have given the columns like who is the lender, who is the borrower, for which purpose the borrower has used the money. Can I say who is the lender that is immaterial for me? What is important is who is borrower and where the borrower has used the money. And accordingly, I will decide that whether to that lender interest income is taxable or not taxable. Let's say lender is Mr. A and the borrower is Government of India. Government has used the money in India. Tell me whether to that lender, that is Mr. A, that interest income is taxable or not taxable, deemed to accrue or not deemed to accrue. Deemed to accrue in India. The simple reason is government is the borrower. Now, what if Government of India has used the money outside India? Again, that interest will be taxable in India. The reason being, when I have talked about who has paid the interest, Government of India, I have not looked at where government has used the money. Government can use the money wherever it want to. It will be always taxable in India. Okay. Then if borrower is, let's say lender is Mr. B, borrower is Mr. Ram who is resident. Now what if that borrower has used the money for doing business in India? Yes, taxable in India. Borrower has used the money for doing business outside India, not taxable in India. Acha, borrower has used the money to purchase house property in India, taxable in India. Borrower has used the money to purchase house property outside India. To that lender, interest is not taxable in India. Now, what if borrower is a non-resident and that non-resident has used the money for doing business in India. Yes, to that lender, interest is taxable in India. What if this borrower has used the money to do business outside India? Not taxable in India. What if this borrower has used the money to purchase house property in India? Not taxable in India. Because if the borrower is a non-resident and he has used the money for business in India, then only interest is taxable in India. Can I say here the borrower has used the money for doing any other activity and hence that interest is not taxable? Acha, what if borrower has used the money to purchase house property outside India? Again, it is not taxable in India. So this is the difference if the borrower is a resident या तो borrower is a non-resident. I hope this is pretty clear to you. And that was all about taxability of interest. And this was the basically short summary of that particular point. The same provision, the same kind of thinking is applicable for two other income. Which two other income? Royalty or fees for technical services. Which two other income? Royalty and fees for technical services. Tell me what you understand by the word royalty. What is the meaning of royalty? In very layman language, if you have any land or building and you give it to somebody for usage, the another person will give you rent. If you have any intangible asset which you give some person for usage, that person will give you royalty. That person will give you royalty. For example, I have written a book, I have done copyright, and if some producer wants to produce that book, I will ask for some payment now because he is using my copyright. That is royalty. I have a patent in my name. My business name is registered. Somebody wants to use my business name and wants to, earn the profit. I will ask some portion of the profit because he's using my name, my patent. And that's what I'm charging is called as royalty. So if you have any intangible asset, you give it to somebody for usage, then that usage charges are called as royalty. What is fees for technical services? If you are providing any managerial services, if you are providing any consultancy services, if you are providing any technical services, and against that whatever charges you are taking is called as fees for technical services. Now my question is, when any royalty or fees for technical services deemed to accrue or arise in India? And that we need to identify. Now again the same thing. You have to identify who is paying you royalty, who is paying you fees for technical services. If it is paid by government of India, taxable in India. If it is paid by any resident person, then check where your asset, if it is a royalty, yeah, where your services, if it is fees for technical service, where your asset, where your services are used. If it is used in India for any purpose, your income will be taxable in India. For example, let's say there is a person in USA who has a trade name and that trade name has a patent. I want to use that trade name in India to start a business and I am paying royalty to them. Now, can I say for that person who is in USA, he is getting royalty income from a person who is resident in India, and the person who is resident in India is using this asset, is using this trademark for doing business in India, for any activity in India. To the person who is in USA, this royalty will be taxable in India. But if this asset or services are used outside India, this royalty or technical fees are not taxable in India because India has no relevance with this particular income. Now let's say if royalty or fees for technical services are paid by a non-resident, again you have to ask where this asset or services are used. If this asset or services are used in India for any purpose, this income will be taxable in India. If this asset or services are used outside India, this particular income is not taxable in India. Now, tell me one thing. There are 3 points which look similar to each other. Interest, royalty, fees for technical services. Royalty and fees for technical services I have explained together. Interest I have explained separately. Why I have not merged them? What is the difference between interest and royalty fees for technical service? What is the difference between these two? What is the difference? Can I say in the case of interest, if interest paid by any non-resident and he has used money in India for business purpose, then that interest will be taxable in India. But so far as royalty and fees for technical services are concerned, if the payer has used your services, payer has used your asset in India for any purpose, then also it will be taxable in India. Here, resident payer and non-resident payer are equivalent. There is no difference absolutely because money is not involved. In the above interest wala point, we used to fetch money and for that we have given exemption. Here money is not involved. Here it is asset ya to services and hence resident payer and non-resident payer are equivalent to each other. Are you getting my point? So see what I have written over here. Royalty and fees for technical services, that is technical fees. Royalty means a consideration to use the intangible asset. Technical services means any consideration for rendering managerial, technical or consultancy service. It will be deemed to accrue or arise in India if paid by Government of India, taxable. Paid by any resident person and he has used the services or asset for any purpose in India, deemed to accrue in India. If it is paid by non-resident and use the services for any purpose in India, again it is deemed to accrue or arise in India. So here these two things are similar to each other. There is no difference at all. Last point. Let's take a simple example, not that relevant, but let's say US President Mr. Trump is my friend. Trump is in USA and he's doing engagement, let's say in White House. The ceremony is there, engagement ceremony is there. And I'm obviously in India, but I'm a very good friend of Mr. Trump. So in his engagement ceremony, he called me. But I was very busy. My lectures were going on. So I said, no, I can't come to your engagement. But he was my good friend. So I have to send some kind of money or gift to him. So my one of other friends were going to his ceremony. So what I did was I sent, let's say, $1,001 as a gift on his engagement. So I sent $1,001. Now can I say Mr. Trump, who is outside India, has received a gift of $1,001 from a person who is resident of India, then this gift income is taxable in India. It is deemed to accrue or arise in India. So if you are a person outside India, you have received a gift from a person who is resident of India, that gift income will be taxable in India. But intentionally I have said engagement. If I would have written marriage, then we will study one chapter IFOS, income from other sources. In that we will study gift income for 2 hours approximately. And we will understand that if any kind of gift is received at the occasion of marriage, it is never taxable, it is exempted. So here same rules are applicable. If I would have sent this money for marriage of Mr. Trump, it would have been exempted because marriage is exempted over here. Similarly, if gift is received from relative, then also it is not taxable. The same exception is applicable over here also. And that's why I said Mr. Trump is my friend, not brother. Because if I would have said him a brother, then gift from relative would not have been taxable. See what I have written over here? Any monetary gift received by a person who is outside India from a person who is resident of India, it will be deemed to accrue or arise in India. Exceptions mentioned in 56 subsection 2 clause 10 shall apply, and this we will learn in IFOS chapter. Two exceptions I just said. One is marriage. If gift is received on marriage, it is not taxable. Second one is relative. If gift is received from relative, again it is not taxable. Intentionally I have said I sent $1,001. What if I said I sent a gold ring to Mr. Trump as a gift? It would not have been taxable because this point says any monetary gift. It don't cover non-monetary gift. If I give any non-monetary gift outside India to that person, it will not be taxable in India. It will be taxable in India only if I send a monetary gift. Are you understanding this, people? So these were some of the transactions which are covered by Section 9 deemed to accrue or arise in India. Let's quickly revise Section 5 and Section 9 and then we'll do so many examples. First of all, any income received in India, deemed received in India, accrued in India, deemed accrued in India, taxable in India. Any business accrued and received outside India from a business which is controlled or set up in India, R&OR, RBNOR. Any business accrued, received, controlled outside India, only taxable to R&OR. Any other income accrued or received outside India, only taxable to R&OR. Any past year income remitted to India, it is just an inflow, it is taxable to no one. Section 9, what is deemed to accrue or arise in India? If you have any connection in India, like agent in India, and through that business activity is done, it is taxable in India. Second, if you have any property in India, and through that you earn any rental income, interest income, dividend income, taxable in India. You are a government employee, government of India is paying you salary, even though you are working outside India, that salary is taxable in India. Allowances and perquisite will be exempted. Acha, when interest income is taxable in India, if paid by government, taxable. If paid by any resident and he has used the money in India, taxable. If interest is paid by non-resident and he used your money in India for business or profession, taxable. Royalty or technical fee, if paid by government of India, taxable. If paid by any resident or non-resident and your asset or services are used in India, taxable. And ultimately, if you receive any kind of gift outside India from a person who is resident of India, even that gift is also taxable. Before I start any question answer, there is one small point I have written. Section 10, clause 1. Again, this we will learn in future in detail. Any agricultural income from India is always exempted. So if you want any agricultural income, it is exempted. And see, reasoning I have already said in the very first lecture. Article 246 contained three lists. In that central list, in that the entry number 82 gives the power to income tax to collect the tax on every income other than agriculture income. So basically Income Tax Act don't have a right to collect tax on agriculture income. And that's why there is one exemption given, section 10 clause 1. But please understand, agricultural income from India is exempt. Let's say I am a R&OR. I'm doing some agricultural activity in Bhutan and I'm receiving that income. That is taxable because this is not agricultural income from India. Exemption is only if agricultural income is from India in India. Now, based on this 5 example, we need to see. First, we will refer illustration number 5, 6, 7, and 8. And then we will solve extra question number 5. Then one more particular question I will give you, which is a combination of residential status and scope of income. First, we will refer illustration number 5, 6, 7, and 8. Just because it is illustrations, can I say answer will be there in question answer book itself? Okay, moving toward ILLU 5. This kind of question, like illustration 5, generally asked in examination for 4 to 5 marks. From the following particulars of income furnished by Mr. Anirudh pertaining to the year ended on 31st March 25, compute total income for assessment year 25-26. If he is a resident and ordinary resident, resident but not ordinary resident, non-resident. Means we have to think from the viewpoint of all the three. Then what I'll do? First, I will write down the heading of R and OR. I'll solve the entire question. Then I will write down the heading of RB and OR. Again, I'll solve the question. Then non-resident like this. No, can I say it is triple majority? Na? What I'll do is particulars R and OR, RB and OR, NR. I will prepare 3 column. If it is taxable to all the 3, I will write the amount in all the 3. If it is not taxable to any one of them, I will write 0 in that particular column. So answer is to be presented in this kind of columnar format. Particulars R&OR, RBNOR, NR. Okay. It is very easy. One by one we'll do each and every transaction and will correlate with whatever we have learned up to now. First, short-term capital gain on sale of shares of Indian company received in Germany, 15,000. Now understand, can I say you have sold the shares of Indian company? Means you have sold Indian asset. If you have any capital gain from selling of a capital asset in India, it is deemed to accrue or arise in India. And something which is deemed to accrue or arise in India, can I say it is taxable to all the three? So this 15,000 will be taxable to all the three. 15,000, 15,000, 15,000. Then dividend from a Japanese company received in Japan. Can I say this is any other income which is accrued outside India, received outside India? Scope of income ka point number 7. It is only taxable to R and OR. It is not taxable to RB and OR. It is not taxable to a non-resident. So this 10,000 is only taxable to R and OR. Then rent from property in London deposited in a bank in London, later on remitted to India through approved banking channel. Now tell me what I will assume. Is it a past year income? No. They have not written it past year. They have not written last year. Can I say first I have received during the year? In this year only, I'm transferring this income in India. What I will ignore this part. Remittance wala part I will ignore. But what is important for me? I have a rental income from a property outside India. This rent income is also received outside India. Again, table ka point number 7, only taxable to R and OR. But how much taxable? Is it 75,000? No. Can I say I have told you from rental income you have to deduct 30% standard deduction. So what will be taxable? 52,500. Then dividend from RP Limited Indian company. Can I say this basically source is in India? From Indian company ke share you are receiving a dividend income. That means it is deemed to accrue or arise in India. And something which is deemed to accrue or arise in India is taxable to all the three. So this 6,000 will be taxable to all the three people. Last, agricultural income from land in Gujarat. Can I say we just learned section 10 clause 1, agricultural income from India is exempted. So this will be taxable to no one, 0, 0, 0. Finally, total of all this, that will be the final answer. As they have also written, from rental income 30% standard deduction and agricultural income is exempted. Section 24 reference will understand in today's lecture only when we start income from house property. Moving toward illustration number 6. Mr. David, an Indian citizen, aged 40 years. A government employee serving in the Ministry of External Affairs left India for the first time on 31st March 2024 due to his transfer to High Commission of Canada. He did not visit India any time during the previous year 24-25. First of all, this is a classic combination of residential status and scope of income. Can I say this person went outside India in the last year, and during the year 24-25 he was not in India even for a single day, then this person will become non-resident. Then further question we have to solve as if this person is a non-resident, and we'll tell whether this income is taxable or not. Very first income, salary, computed 5 lakh. Computed means all the deductions as per Income Tax Act has been given. Now tell me, can I say Mr. David is a non-resident but he's a government employee, also Indian citizen? And we have learnt in section 9 that if you are an Indian citizen working outside India but you are a government of India ka employee, that salary is deemed to accrue or arise in India, which is taxable to non-resident also. And hence this 5 lakh rupees will be taxable in India. Then foreign allowance, which is not included above, 4 lakh. Can I say in the same point we have learnt a section 10 clause 7, allowance and perquisite paid by government of India to Indian citizen outside India is exempted, and hence this foreign allowance will not be taxable in India, exempted. Interest on fixed deposit from bank in India. Can I say the source is in India? It is deemed to accrue or arise in India. This 1 lakh rupees will be taxable. Income from agriculture in Nepal. Now see, agriculture is in Nepal. It is not from India. So basically section 10 clause 1 ka exemption is not applicable. However, this income accrued in Nepal, if nothing is said, received in Nepal, this point is only taxable to R and OR, and Mr. David is a non-resident, and hence this income will not be taxable. So the non-taxability is not because of agriculture income. It is not in India. It would have been taxable. But why this is not taxable? Because it is not covered by the purview of scope of income. Similarly, income from house property in Nepal, 2,50,000. Can I say this is also such kind of income which is accrued outside India, received outside India, only taxable to R and OR. This person is a non-resident and hence it is not taxable in India. So this is also not at all taxable. Fine. So ultimately only two income is taxable. One is 5 lakh, one is 1 lakh. Total is rupees 6 lakh. Illustration 7. Miss Vivitha paid a sum of 5,000 US dollar to Mr. K, a management consultant practicing in Colombo. So by the way, Mr. K is basically a practicing consultant in Colombo, so must be a non-resident. If non-resident, here it is written also. The consultancy is related to a project in India with possible Sloanis collaboration. So basically, Mr. K is in Colombo. He is rendering the services from Colombo, but the services are ultimately used in India because the project is in India. Is the payment chargeable to tax in India in the hands of Mr. K since the services are used in India? The question itself has the answer. As the services are used in India, can I say that fees for technical services are deemed to accrue or arise in India? And whatever is deemed to accrue or arise in India, it is taxable to non-resident also. And hence this 5,000 US dollar will be taxable in India. Let's read the answer, what they have written. A non-resident is chargeable to tax in respect of income received outside India only if such income accrue or arises or deemed to accrue or arises in India. The income deemed to accrue or arise in India under section 9 comprises income by way of fees for technical service, which include any consideration for rendering of any managerial, technical or consultancy service. Therefore, payment to a management consultant is called as fees for technical service. The explanation below section 9 clarifies that income by way of fees for technical service from service utilized in India would be deemed to accrue or arise in India even in case of non-resident, and it will be included in his total income, whether or not such services are rendered in India, whether or not that non-resident has a place in India. Because can I say the ultimate services are used in India. In the instant case, the services are utilized in India and hence the payment of 5,000 US dollar will be taxable to Mr. K even though he is the non-resident. One thing repeatedly they have written 3 times, but that is fine. Now we are referring to illustration number 8. Two questions from this chapter you will see on the last day. One was illustration number 2 regarding residential status. One is illustration number 8 because it covers entire scope of income. So many transactions are given, and for all this transaction we need to give them suitable reply that to whom it is taxable, R&OR, RBNOR, non-resident. Compute the total income in the hands of an individual aged 35 years, being R&OR, RBNOR, non-resident for AY 25-26, that is PY 24-25, assuming that he has exercised the option of shifting out of default regime, basically following old regime. This we have seen in the first chapter. Shifted out of default regime means old regime. The first transaction, interest on UK development bond. Total interest is 10,000. 50% of the interest received in India. Now understand, UK development bond ka interest, can I say, accrued outside India? And whatever is accrued outside India, it is only taxable to R and OR. So first of all, this entire 10,000 is taxable to R and OR. But what the mistake RBNOR and NR has done, they have received 50% of interest in India. And whatever you receive in India, can I say it is taxable to all the three? So to RBNOR and NR, 5,000 will be taxable because that much is received in India. So ultimately R and OR 10,000, RBNOR 5,000, non-resident 5,000. Then income from a business in Chennai. I will not read further because the business is in India. Can I say that income accrued in India? And that's why it will be taxable to all. 20,000, 20,000, 20,000. Short-term capital gain on sale of shares of an Indian company received in London. Can I say if you sell any Indian asset, capital gain is deemed to accrue or arise in India? And hence this 20,000 will be taxable to all the three, deemed to accrue or arise in India. 20,000, 20,000, 20,000. Then dividend from British company received in London. Now dividend from British company received in London, can I say it is such a income which accrued outside India, received outside India, it is only taxable to R and OR. To balance of these two people, it will not be taxable in India. It is point number 7 of the table. Long-term capital gain on sale of plant at Germany, 50% of the gain received in India. Now, first of all, as such, this income is accrued outside India. So it is only taxable to R and OR, 40,000. But can I say again, what is the mistake of RBNOR and NR? That they received 50% in India. So now to both of them, that 50% will be taxable in India. And hence it will be 20,000, 20,000. So ultimately it will be 40,000, 20,000, 20,000. Then income earned from business in Germany, which is controlled in Delhi. Total profit 70,000. And out of this 40,000 is received in India. First of all, can I say the business is accrued outside India, controlled from India? And whatever is controlled from India, it is covered by table ka point number 5. And as per table ka point number 5, it is taxable to R and OR and RBNOR. So to both of them, it will be fully taxable, 70,000, 70,000. But what is the mistake that a non-resident has done? Can I say he has received 40,000 is in India? And to that 40,000, it will be taxable in India. So to the non-resident, taxability will be 40,000. Please understand. To R and OR and RBNOR, we have done fully taxable because they are covered under table ka point number 5. But to non-resident, we have taxed 40,000 because he is covered under table ka point number 1, received in India. Then profit from a business in Delhi. I will not read further because the business is in Delhi. Can I say it accrued in India? It will be taxable for all the three. So 15,000, 15,000, 15,000. Just an alignment issue is there, taxable to all the three. It is like this. So just an alignment issue over here. Then income from house property in London deposited in a bank in London brought to India. I will ignore these words brought to India. But what is relevant to me? Accrued outside India, received outside India, only taxable to R and OR. But can I say this is already computed? Means 30% standard deduction is already taken. Don't take it further. Only 50,000 will be taxable, and just to whom? R and OR. Interest on debenture in Indian company received in London. Can I say your interest income is from an Indian company? So basically the source is in India, deemed to accrue or arise in India, it will be taxable to all the three, 12,000, 12,000, 12,000. Fees for technical services rendered in India but received in London. Now, whenever it is received, wherever it is received, but can I say the services are rendered in India? And if the services are rendered in India, it is deemed to accrue or arise in India, again it will be taxable to all the three. 8,000, 8,000, 8,000. Then profit from a business in Mumbai, I will not read further because the business is in India, accrued in India. Again, it is taxable to all the three. 26,000, 26,000, 26,000. Income from house situated in Nepal received there. It is an income which accrued outside India, received outside India. Table ka point number 7, only taxable to R&OR, 16,000. It is already computed, no need to deduct 30%. Past foreign untaxed income brought to India during the previous year. Can I say it is a past income? And hence it is table ka point number 8. It is merely an inflow. It will be taxable to no one. So this 5,000 will not at all taxable to anyone. Income from agriculture land in Nepal received there, then brought to India. See, I will ignore this then brought to India. The important point is agricultural land is in Nepal and received there. See, don't get emotional by looking at the word agriculture. Agriculture, if it is in India, then it is exempt. This is to in Nepal. Normal income accrued outside India, received outside India, only taxable to R&OR. 18,000. Then income from profession in Kenya set up in India, received there, but spent in India. Now, first of all, the important point to note is set up in India, meaning thereby controlled from India. And if a profession is controlled from India, it is table ka point number 5. And as per table ka point number 5, it is taxable to R&OR, RBNOR. So it will be like 5,000, 5,000, 0. Gift received on the occasion of his wedding. Now, can I say I just explained while explaining that gift income. If gift is received at the occasion of marriage, it is not at all taxable. So this 20,000 is taxable to no one. Interest on saving bank deposit in State Bank of India. Can I say the source is in India, deemed to accrue or arise in India? This income will be taxable to all the three. Income from business in Russia, controlled in Russia. If nothing is said, received in Russia. So accrued outside India, received outside India, controlled outside India. This is table ka point number 6. Only taxable to R&OR. Dividends from Reliance Petroleum Limited, an Indian company. Can I say the source is in India, deemed to accrue or arise in India, taxable to all the three. 5,000, 5,000, 5,000. Agricultural income from land in Rajasthan. It is an agricultural income from India. Section 10, clause 1. It is exempted and hence it is taxable to no one. And accordingly, final answer will be like this by doing the total of the three. Achha, what they have written about this ATTTA ka deduction, you may ignore this because this will do in deduction chapter. And just because you will all refer all this question on the last day also, reference of ATTTA is given. As of now, you need to remember up to gross total income only. Are you understanding this? There are so many permutation combination that this one particular question has given. It contains so many points of scope of income, so many points of deemed to accrue or arise in India. One more question I have made from my side so that you better understand this. It is extra question number 5. Yes. Let us understand this question now. Just because it is a part of extra question, can I say the answer is given in my notes? So the answer you will find in my notes, but take it as a challenge, giving you 1 minute. Now this entire question you have to solve accordingly this three, R&OR, RBNOR, NR. Have a rough page. Just make 3 columns, R&OR, RBNOR, NR. In whatever column, whatever is the taxable amount, note it down, and then we'll see the answer together. First, solve this three adjustment. Solve this three adjustment first. Read it, solve it, and then I'll help you out. Let us solve it together first, and then we'll go to some other transactions. First of all, royalty received from Government of India 24,000. Now, can I say this is a part of that deemed to accrue or arise in India? If royalty is paid by Government of India, it is deemed to accrue or arise in India, and hence it is taxable to all. 24,000, 24,000, 24,000. Now, in any question regarding income tax, you always need to write previous year and assessment year. So don't forget, our previous year is 24-25, assessment year is 25-26. Second, income from business earned in Afghanistan, 25,000, of which 15,000 received in India. Now, this business is controlled from Afghanistan. So can I say, first of all, business accrued outside India, controlled outside India, generally taxable to R&R. How much? 25,000 fully. But what is the mistake of RBNOR या तो non-resident? They have received 15,000 in India, and whatever they receive in India, it is always taxable. So to them, 15,000 will be taxable. So it will be like 25,000, 15,000, 15,000. Interest received from Mr. G, who is a non-resident, against a loan provided to him to run a business in India. Now, in interest wala point, today only in the starting we understood that if loan is given by a non-resident, loan is given to a non-resident who use the money for doing business in India, then that interest income is deemed to accrue or arise in India, and hence it will be taxable to all the three. So it will be 5,000, 5,000, 5,000 because it deemed to accrue or arise in India. Now, whatever is your reasoning, you can write down over here as a small one-liner note. It is okay. Okay. Solve this balance of the adjustment. Point number 4 till point number 9. Solve it. Let us solve it together now. Royalty received in India from S, who is a resident, for technical services provided to run a business outside India. The entire statement is not to be read as such. Our question was over here only. Royalty received in India. If something is received in India, it is table ka point number 1. It is taxable to all the three. So it will be 20,000, 20,000, 20,000. Income from business in Jaipur 40,000. I will not read further. Can I say business is in India? It accrued in India. And if something is accrued in India, again it will be taxable to all the three. 40,000, 40,000, 40,000. Profit on sale of shares in Indian company received in Germany. Can I say we have sold the shares of Indian company? Just because we have sold the shares of Indian company, the source is in India, deemed to accrue or arise in India, this 15,000 is taxable to all the three. So it will be 15,000, 15,000, 15,000. Then dividend from Japanese company received in Japan, 10,000. Tell me, Japanese company, dividend is received from Japan, accrued outside India, received outside India, only taxable to R and OR. So to R and OR, 10,000 will be taxable. To balance 2, nothing is taxable. Then you have received dividend from RP Limited, Indian company 5,000. Can I say again the source is in India? It will be taxable in India. So this 5,000 will be taxable to all the three. Income from property in London, deposited in a bank in London, later on remitted to India, 1 lakh. Now can I say accrued outside India, received outside India, only taxable to R and OR. But how much will be taxable to R and OR? It is not 1 lakh. Because 1 lakh is the rental income. And can I say out of rental income, you will get 30% standard deduction. So how much will be taxable to R and OR? 70,000. To balance 2, it will be 0. Last, income from business in Canada controlled from Mumbai, out of which 27,000 received in India. Now can I say if business is controlled from India, it is taxable to R and OR, RBNOR, but it is not taxable to non-resident. But here, what is the mistake of a non-resident? He has received 27,000 in India. So to R and OR and RBNOR, full 50,000 will be taxable. But to a non-resident, only 27,000 will be taxable. So the answer will be like 50,000, 50,000, 27,000. And then whatever is the total will become your final total income. Are you understanding this? So certain transactions which were not covered by module that I have tried to cover in this particular point. Now, let me give you one question, and prior to giving that question, we want to revise something. In the last lecture, we have done some 3 exceptional cases of residential status. What was the first exceptional case? You are Indian citizen, you are living India for the purpose of business, profession या तो job outside India. Second was you are an Indian citizen, you are living India as a crew member of Indian ship which is going to foreign country. We will check only 182 days. If satisfied, resident. If not satisfied, non-resident. Third case, you are an Indian citizen या तो person of Indian origin. You are coming to India for visit. First, we will check 182 days. If satisfied, the person will become resident. If not satisfied, we will check what is the Indian income. If Indian income is less than or equal to 15 lakh, non-resident. If Indian income is more than 15 lakh, we will check one more condition, 120 plus 365 days. If satisfied, RBNOR. If not satisfied, non-resident. Now, what is the meaning of Indian income? The income which either received in India, accrued in India, controlled from India. That is table ka point number 1 to 5. Okay. Let me share one example with you and you need to solve it. You may also write along with me. Mr. A, Indian citizen, visited India for 115 days during previous year 24-25. He has earned below mentioned income. Income accrued in India 6 lakh. Income controlled from India 5 lakh. Income accrued outside India 2 lakh. Income received in India 5 lakhs. Calculate total income. Now, based on this question, first you analyze what is this residential status. Once the residential status is determined, then you have to calculate total income based on scope of income. Note it down, solve it, then we'll discuss the answer. Okay. Now please understand, first of all, he is a Mr. A who is an Indian citizen who is visiting India. Now, if any Indian citizen or person of Indian origin visiting India, it is covered by third exception. And as per the third exception, first we need to check 182 days ka condition. This person don't satisfy 182 days ka condition. Then we have to check what is his Indian income. So first over here we need to check what is his Indian income. Now what is the meaning of Indian income? The income which either accrued in India or received in India or controlled from India. Here tell me, accrued in India 6 lakh, controlled from India 5 lakh, received in India 5 lakh. So total can I say it is 6 lakh plus 5 lakh plus 5 lakh, totaling to 16 lakh. And that is more than 15 lakh. Just because it is more than 15 lakh, we need to check one more condition, and that is 120 days during the year plus 365 in preceding 4 years. But here the person is staying in India only for 115 days. Meaning thereby can I say he don't satisfy 120 days ki condition, and hence the person will become non-resident of India. Now, if a person becomes non-resident of India, then we have to calculate his total income. Please understand, to a non-resident, only four income are taxable in India. Received in India, deemed received in India, controlled from India, no. Accrued in India, deemed accrued in India. If it is controlled from India, to a non-resident, it is not taxable in India. And hence, when we will calculate the final total income, we will add only two income. One which accrued in India, one which is received in India. The one which is controlled in India, though it will become part of our Indian income, but it is not taxable to non-resident. It is only taxable to R&R and RBNR. So ultimately, how much will be taxable income of this person? 11 lakh. Are you understanding this? So while you calculate Indian income, you have to see 3 points: accrued, received, controlled from India. And based on that, we need to check that 15 lakh ka condition. However, when the person becomes non-resident and we are going to tax him, we will tax only two things: received or accrued in India, which include deemed received and deemed accrued in India. I hope it is clear to you. This was a merger of basically residential status and scope of income. Whenever you revise this chapter, maximum time to refer only notes 2 hours along with sums 4 hours. This is the very maximum time I have written. Last day only two illustration you will check: illustration number 2, illustration number 8. Important section numbers I have already mentioned over here, which you need to remember for this chapter. In this particular chapter, I have given you homework section. Homework questions are given. And there are lots so many questions that I have given along with the answer. First, all the questions are given. It is approximately 20 questions. And once questions are done, then I have given you entire homework section. Please understand, you are supposed to do this homework section within 2 days. So that if you have any kind of doubt, you can ask me before you go to the homework section of next particular chapter. Before I start with the next chapter, once let us quickly revise this chapter. I will speak each and everything related to this chapter. You can make a separate audio so that whenever you want to revise this chapter, you can start that audio and the entire chapter is being revised. So let us start the revision. Residential status and scope of income. Either you can be individual HUF or you can be any other person. If you are individual HUF, either you can be resident or you can be non-resident. If you are resident, you can be either resident and ordinary resident or you can be resident but not ordinary resident. If you are any other person, either you can be resident or you can be non-resident. Residential status of individual, section 6 subsection 1 plus section 6 subsection 6. There are two methods. One is general cases, one is exceptional cases. First, we'll discuss general case. First, I'll tell you two basic conditions. You need to satisfy any one of them. If you satisfy any one of them, you will become resident. Otherwise, you will become non-resident. If you are resident, I will tell you two additional conditions. If you satisfy both, you will become R&OR. Otherwise, you will become RBNOR. First basic condition, the person should be in India for at least 182 days during the year. Second one, the person should be in India for at least 60 days during the year and 365 in preceding 4 years. The day when you entered India, the day when you left India, both are to be counted in India. Additional condition number 1, the person should be in India for at least 730 days out of past 7 years. Second, the person should be resident in at least 2 years out of 10 preceding previous year. If you satisfy both, you will become R&OR, otherwise you will become RBNOR. But now that comes to exceptional cases. First exceptional case, you are an Indian citizen, you are living in India for the purpose of business, profession or employment outside India. Second, you are an Indian citizen, you are living in India as a crew member of Indian ship which is going to foreign country. In both these cases, we will only check 182 days key condition. If satisfied, the person is a resident. If not satisfied, directly non-resident, you will not check 60 plus 365. Third, Indian citizen or person of Indian origin coming to India for visit purpose. First, we will check 182 days. If satisfied, the person is a resident. If not satisfied, we will check what is his Indian income. If Indian income is less than or equal to 15 lakh, non-resident. If Indian income is more than 15 lakh, we will check one more condition, 120 days during the year plus 365 in preceding 4 years. If satisfied, RBNOR. If not satisfied, non-resident. Last, if you are an Indian citizen, non-resident as per all other provision, but your Indian income is more than 15 lakh, you are not supposed to pay tax in any other country or territory, you will become RBNOR, that is called as deemed resident. Now we come to residential status of HUF. Section 6 subsection 2. Read with section 6 subsection 6. Firstly, we need to check where is the control and management. If the control and management is both outside India, the person is basically non-resident. If control and management partly or fully in India, HUF will become resident. If HUF is a resident, what we will check now? Whether Karta satisfied both additional conditions. If yes, HUF will become R&OR, otherwise HUF will become RBNOR. Then residential status of firm, AOP, BOI, AJP, local authority. Again, we have to check control and management. Wholly outside India, non-resident. Wholly or partly in India, resident. Then section 6 subsection 3, company. If it is an Indian company, resident. If it is a foreign company, we have to check where is the POEM, place of effective management. If POEM is in India, resident of India. If POEM outside India, non-resident. Scope of income section 5. Income received in India, deemed received in India, accrued in India, deemed accrued in India, taxable to all the three. Income accrued outside India, received outside India, controlled from India, taxable to R&OR, RBNOR. Any other business income accrued, received, controlled outside India, only to R&OR. Any other income accrued or received outside India, only to R&OR. Any past year income remitted to India, taxable to no one. Please understand, deemed to accrue or arise in India means section 9. If any business arises due to India, if any interest is received because of any asset in India, rent is received because of property in India, dividend is received because of you have Indian company ka share, capital gain because of any capital asset situated in India, salary received because services are rendered in India, all this income deemed to accrue or arise in India. Next, if you are an Indian citizen, you are an employee of Government of India, your salary will be taxable in India. However, as per section 10 clause 7, foreign allowance and foreign perquisite paid by Government of India to Indian citizen is exempted. Then interest will be taxable in India if it is paid by number 1 Government of India. Number 2, it is paid by a resident person who has used the money in India. Number 3, it is paid by a non-resident who has used the money for doing business in India. Royalty and technical fee will be taxable in India if it is paid by number 1 Government of India. Number 2, it is paid either by resident or by non-resident and if the services or asset is used in India. Finally, any monetary gift received by a person outside India from a resident in India, then that gift income will also be taxable in India. Here 2 to 3 points you have to remember. Rental income, you will get 30% standard deduction. Section 10 clause 1, agricultural income in India is completely exempted. I hope you understand this was A to Z of our chapter residential status and scope of income. One last point which I forgot to share earlier. A doubt may come into your mind. Sir, as per scope of income, we say that if received in India, taxable in India. If accrued in India, taxable in India. What if there is one income which I have received in China, accrued in India? I will tax it because accrued in India. Chinese government can say, na, it is received in China, so taxable in China. Acha, vice versa. If any income is accrued in Russia, received in India, we will tax that income by saying that it is received in India. Russia will tax it by saying that it is accrued in Russia. So can I say on a single income, two countries are asking tax on that? But it will not happen. Within each countries, India have a DTAA, double taxation avoidance agreement, which we will learn in CA final, wherein this agreement will clearly write that if this incident come into the picture, wherein on one single income, we both the countries are taxing to the same person, then any one of the country will exempt it, and the second country will demand the tax. So ultimately, I have to pay tax on any one of the country. As of now, what we understood, when India can ask the tax, it will ask the tax. It is not necessary. It depends on double taxation avoidance agreement that is clearly said as treaty. And this we will learn in CA final. Are you understanding this? So that was basically our chapter number 2, that is residential status and scope of income. Yes, homework section, PDF and all I'll upload on that your BB virtual portal. That question bank up to first 3 chapters I'll upload today itself. That I'll make sure I'll upload it. After the lecture, I'll soon upload it. Yeah. Now we are going to start our very third chapter, that is income from house property. But that I'll start after a short break. We'll exactly resume at 4 o'clock and 26 minutes. 4:26 will resume with the very next chapter, income from house property. Thank you. Hello, dear students. Once again, a very good afternoon to all of you. We are done with our two chapters of direct tax. First one was basic concept, wherein we understood the terminologies, process, tax rate, rebate, surcharge, marginal relief, rounding off. The second chapter is all about residential status and scope of income, wherein we understood two things. That was residential status. Second one was scope of income. The third one. The third one is basically we are starting with our heads of income now. See, I have told you, when we have understood the entire process, there are five heads of income. Income from salary, income from house property, PGBP, that is profit and gain from business or profession, capital gains, income from other sources. Now we are entering into that chakra view of five heads of income. As such, first head of income is income from salary, but I always start with income from house property because it is easier one. It is a very good chapter to start with heads of income. So yes, we are going to start with the very first head of income, income from house property. It ranges from section 22 till section 27. Achha, whatever we are going to understand in this particular act, I have said in the very first lecture that you must have heard the rumors that the new act is going to come, Income Tax Act 2025. Yes, it is going to come, but all the things which are written in the current act is just copy pasted in the new act. So all the provisions which we are going to learn even in this chapter is very similar in the new act also. Whenever you will be learning CA final, you are not supposed to read all the things again. Whatever we are learning will be same things useful, just the section numbers will change. Provisions will remain as it is. So tell me what we are going to learn in this chapter. If I have a house property and I have given it on a rent to somebody, then how to calculate the taxable income so far as income tax is concerned? So, how to calculate means what? Whatever rental income I'm getting every month, I have to do the total of that. And 12-month rent is income from house property. So simple. Array, if it is so simple, then why this entire chapter? The income, the rental income which I'm getting into my bank account is an inflow. It is like a sales. See, if I'm a businessman, my sales is not taxable, na net profit is taxable. So here also, when we are getting a house property rented to somebody, the rental income is not taxable. The net profit will be taxable. Some expense will be deducted. We are going to understand that only, that how much will be treated as income, how much will be allowed as a deduction, and finally what will be the net surplus that will be added to your gross total income. Achha, whatever we'll understand by this chapter will not going to get tax amount. We are not going to get our total income. We are neither going to get our gross total income because gross total income contains five heads of income. We are going to get the answer of only one head. We'll add four other heads into that. Then we'll get gross total income. From that, we'll deduct chapter 6A, ATC to ATU ka deduction. Then we'll get our total income. On that, we will calculate our tax. So we are just beginning with the one of the steps of calculating total income. By looking at the name of this chapter, income from house property, you tell me what you understand. Are we talking about residential property or we are talking about commercial property or both of them? Which property we are talking about? Residential, commercial or both? Obviously the answer is we are talking about both. We are talking about residential property also, commercial property also, because I have written the word house property, not residential house property. As of now, I am discussing about both this kind of properties. Second question. What do you think which income we are discussing about? If I have a house property, every year I am getting rental income. Am I discussing about this rental income in this chapter? Or let's say I sold the house property and I have a huge capital profit. Am I discussing about that capital profit in this chapter? Or both? Rental income also and capital profit also? Only rental income. Because if I sell a house property and I am getting capital profit, that is taxable under the fourth head, capital gains. It is not taxable under income from house property. In this chapter, I am only discussing about the yearly revenue that I am getting from house property. Is it clear first of all? So this includes residential property also, commercial property also. This includes the annual yearly income that we are getting, not a capital gain, because that is to be dealt with in a separate chapter. Now, in any particular head, the first section is very important because it will be basis of charge. In that particular chapter, we'll understand that whether the remaining chapter is applicable to me or not applicable to me. It is like a charging section. Like whether income tax is applicable to you or not, it depends on section 4, that is charging section. Similarly, whether income from house property is applicable to you or not, that depends on the very first section, section number 22, basis of charge. Please understand this chapter is nearly 5 to 6 mark in examination. Easy one, important one. First section, section 22, basis of charge. Now this particular section gives us three conditions. Condition number 1, condition number 2, condition number 3. And if all the three conditions are satisfied together, then a property is called as house property. And then the income derived from that property will be taxable as per this head. If your property is not fulfilling these three conditions, it is not a house property. This chapter is not applicable to you. So to any property, if you want to drag into this chapter, this three condition needs to be fulfilled. Basically, this condition is related to what? What is called as house property? What is called as house property? Condition number 1. Property should consist of building or land appurtenant thereto. Please understand the pronunciation appurtenant thereto. Property should consist of building or land appurtenant thereto. Now, have I used the word residential building? No, I said building. So that building is residential also, commercial also. So building include residential house, office use, factory, hall, go down, etc. etc. So residential also, commercial also. Second, what I have said, or land appurtenant thereto. Appurtenant meaning thereby attached. Land attached to the building. For example, let's say I live in a bungalow. There is a building. So that building is a house property, right? But along with that bungalow, I have a small parking area. Along with that bungalow, I have a small garden. This parking area, this garden is a land which is attached to this building. Na? So that land is not a separate. It is a part and parcel of my house property. So when I describe my house property, I include this building also and the land also, which is attached to this building. So house property contains two things. Number 1, building. Number 2, land attached to the building, that is land appurtenant thereto. See, I have written over here, land appurtenant means any land attached to the building. For example, garden area, parking area, all these are called as land attached to the building. Second condition, assessee should be owner of the property. Obviously, if I'm not the owner of the property, it is not a house property for me. This chapter is not applicable to me. This chapter is applicable only if you are the owner of that property. I have written something into bracket, even if registration is pending, which is related to this line. Owner includes deemed owner. Deemed owner. What is the meaning of deemed owner? Even if you are not a legal owner, income tax will assume that you are the owner of the property. This is called as deemed owner. But the conditions of deemed owner will understand in section 27, ekdam last in this chapter. As of now, you can safely ignore this. What you need to remember, the second condition, assessee should be owner of the property. So first condition, there has to be a building or land appurtenant thereto. Second, assessee should be owner of the property. Third condition, which is very important, property should not be occupied for the purpose of own business or profession carried on by him. If I'm using my building for my business or profession, it is not a residential, it is not a house property, it is a business property. It is to be dealt with in PGBP chapter, profit and gain from business and profession. So how contradictory your statements are. Earlier you said commercial property is also included in the word house property. Now you are saying that if the property is used for business and profession, it is not a house property. Isn't it contradicting with each other? No, it is not. Let me tell you how. Just assume what I'm saying. There is a commercial complex, and in that commercial complex, I have an office in my ownership. I'm the owner. There is a building. But from that office, I'm taking the lectures, I'm running my CA in practice. So basically, can I say I'm using that office for my business or professional purpose? Third condition violated. So that office is not a house property, it is a business asset. It is to be dealt with in PGBP chapter. But now let's say in the same commercial complex, I have one another office in my name. It is a commercial building, but I'm not using it for my business or profession. I'm giving it on a rent to somebody, and I'm getting the rental income. Can I say there is a building? I'm the owner. I'm not using it for my business and profession. Though it is a commercial building, but it is not used for my business and profession. That building is called as house property. So the nature of the building is not important. What you are doing from that building. Are you giving it on a rent to somebody, or you are using it for your own business or profession? If using for your business and profession, it is not a house property. If giving on a rent to somebody, it is the house property. Are you understanding this? So ultimately, three conditions are there. Which are the three conditions? Number one, there should be a building or land appurtenant thereto. Assessee should be owner of the property. Property should not be occupied for the purpose of own business or profession carried on by him. Based on these three conditions, let us have some examples and try to figure out whether the property in my example is a house property or not. Okay, let's say I'm the owner of a vacant land. What is the meaning of vacant land? Can I say it is a land on which there is no building? It is just a party plot, like a party plot. It is just a land without a building. And many times I give this property on a rent to somebody for their marriages. I give this property on a rent in case of Navaratri for playing Garba on that. So basically, I'm getting rental income. Tell me, this rental income will be taxable under which head? Is it a house property or not? Tell me, is it a house property or not? No, it is not a house property. Why? The simple reason being the first condition violated. What is the first condition? There should be a building or land appurtenant to the building. The land alone is not a house property. The land should be attached to the building. If the land is attached to the building, then only it is called as a house property. The land alone is not a house property. Here there is no building. Here it is only land. And that's why this is not a house property. If this is my business, this rental income will go under the head PGBP, profit and gain from business or profession. And if it is not my business, this rental income will go under IFOS, income from other sources. But at least this will not be covered under the head house property. Second example, let's say there is a person, Mr. A, who is the owner of a building. He gave this property on a rental basis to Mr. B. So basically, Mr. B is paying a rent of rupees 10,000 to Mr. A. Now, as per the agreement, Mr. B is allowed to further give this property on a rent to some third person. This is called as subletting. You take the property on a rent, you give it to somebody else on a rent. It is called as subletting, sub-renting. Mr. B has given the same property on a rent to Mr. C, and Mr. C is giving a rent of 15,000 to Mr. B. My first doubt. Here two persons are getting rental income. One is Mr. A, second one is Mr. B. Tell me the rent income of Mr. A will go under which head? The rent income of Mr. A will go under which head? Definitely it will go under the head house property. Why? Because can I say there is a building, Mr. A is the owner, and Mr. A is not using it for business or profession. So the rental income of Mr. A will go under which head? House property. But so far as the rental income of Mr. B is concerned, rupees 15,000, can I say Mr. B violated the second condition? Mr. B is not a owner of a property, and hence the 15,000 rupees of rent will be taxable to Mr. B under income from other sources, IFOS, because the second condition is violated. So remember one line: subletting income is taxable under IFOS because assessee is not the owner. What is the meaning of subletting? Taking the property on a rent, giving it to somebody else on a rent. That will go under which head? IFOS. Third condition. Third example, sorry. Let's say there is a person, Mr. Agam, me, myself. I have a office, and this office, I have given it on a rent to, let's say, my wife, Mrs. Dalal, who is also a CA, and my wife as a tenant because she is paying rent to me. As a tenant, she is using this office for her professional purpose. She is doing CA in practice from this office. Tell me, this rental income will go under which head for me? Is it a house property or IFOS? The question arises because the ultimate use of this office is for professional purpose. Then tell me, this rental income will go under which head? Is it a house property or IFOS? The simple answer is, it is a house property. See, the only thing is matter over here is I have a building, I am the owner, I am not using it for my business and profession. Tenant is using it for business or profession. What tenant is doing from that property is immaterial for me. Tenant can stay in the property, tenant can keep the property vacated, tenant can use the property for business. I'm least concerned. I'm not using the property, now tenant is using the property, and hence this property income will go under which head? House property. Okay. Fourth example. Let's say there is a company called ABC Limited. The company is engaged into construction business. So the business is to construct the property to sell the same. Only one object: to construct the property to sell the same. Now, ABC Limited has constructed a building and it could not be sold. So as of now, the building is still in the ownership of ABC Limited. Meanwhile, to have some working capital, what this company has thought, that let us give this building on a rent to somebody. So the building is rented and the rental income is being derived by ABC Limited. So the company is engaged into a business of constructing the property to sell the same. And meanwhile, up to it is sold, the property is given on a rent. Tell me the rental income will go under which head? Is it a house property or PGBP? Because it is related to business. Is it a house property or PGBP? The answer to this particular rental income is taxable under the head house property. Why? First condition, there should be a building or land appurtenant thereto. Yes, there is a building. Second condition, assessee should be owner of the property. Yes, it is the owner of the property. Third condition, the property should not be used for the purpose of own business or profession. Absolutely satisfied. The business is not to give the property on a rent. The business is to sell the property. So can I say here renting is not a business, and hence the rent income will go under the head house property. But let's say there is a company ABC Limited which owns a building which is given on a rent. And what is the business of this company? The business is to give the properties on a rent. Now, here the business is not to sell the property. The business is to give the property on a rent. Tell me, this rental income will go under which head? Now this rental income will go under the head PGBP, because can I say renting of the property is your business. And hence this is a business income. It will be taxable under profit and gain from business or profession, that is in short called as PGBP. But from your attempt, that is basically May 25, from financial year 24-25, there is a amendment applicable. Amendment is in PGBP chapter, but it is applicable to the income of house property also. What is the amendment? If any person is having a business of renting of the building, but if those building are residential building, even though it is a business, it will still be taxable under house property. So if my business is to rent the property, okay, I understood it is a business. But if it is commercial property, yes, PGBP. But if that renting of the property belongs to residential, then it is a house property income. It is never taxable under PGBP. It will be taxable under which head? House property. So now ultimately, what is the summary of last two examples which I gave? Okay, let me share you the summary of this. You have to see what is your business. Either your business is to sell the property, या तो your business is to give the properties on rent. Now, if your business is to sell the property, then rental income will go under which head? House property. If your business is to give the properties on rent, then see which kind of property you are giving on a rent. Either it can be residential property or it can be commercial property. Now, if it is residential property, then again that rental income will go under the head house property. But if it is commercial property and if it is your business, then it will go under which head? PGBP. Are you understanding this? Note down this summary somewhere. And this point will be very important because it is an amendment. Note down it. Now, whatever examples I gave to you, all those examples I have written over here also. So if I have a vacant land and it is let out, it is not a house property, but it will either go under IFOS or it will go under PGBP because it is not upper tenant to the building. So it is not a house property. The second one, I took a house on a rent for 5,000 per month and I let out to some another person, Mr. Y, for 6,000 per month. So basically what I am doing, subletting. And subletting will always be taxable under which head? IFOS, because I am not the owner of the property. Mr. Agam gave his property to Mrs. Dalal, a CA. Mrs. Dalal is carrying on practice from that. So basically, for me, it is house property because I am not doing business or profession from that. Local constructor has 10 flats which is unsold and given on a rent. It is a house property because renting is not his business. ABC company is into the business of renting residential property. As per the amendment, it is always house property. ABC company is in the business of letting of commercial property. It will be taxable under PGBP. Just go through it once. Now, once you understand that whether this is a house property or not, once you understand that this is a house property or not, then you have to decide which kind of house property it is. Because if the type of house property changes, then the calculation method also changes. The rules also changes. So once you decide that whether any property is house property or not a house property, if it is not a house property, don't see further. The chapter is not applicable. If it is a house property, then you need to decide it is which kind of house property. Tell me one thing. If I have a house property, how I can use that? I mean, what usage I can do with this house property? First, can I say I can stay in that property? I can use it for my residential purpose. I or my family staying in that property. If I'm using any property for my stay purpose, that property is called as SOP. What it is called as SOP, self occupied property. What it is called as self occupied property. So if I have any house property which I'm using it for my staying purpose, it is called as SOP, self occupied property. Second, what I can do with that property? I can give it on a rent to somebody. Obviously, I'm giving it on a rent to somebody. It is used for renting purpose. It is called as LOP. What is the meaning of LOP? Let out property. It is called as let out property. Third, what I can do with this property? Somebody may say that, sir, you can use it for your business. Arey beta, if I'm using it for my business, it is not a house property, na? It is a business asset. I'm asking what I can do with this word called house property. If I cannot stay in that, I'm not renting it. Basically, I'm doing nothing from that property. I'm doing nothing. It is neither used for self-occupation nor it is let out. It is totally vacated. It is totally blank. It is totally vacated for the entire 12 month. I'm using it nowhere. Government said, how is it possible? You have a house property, but you are not using it for the entire year. What we will assume that you must have given it on a rent to somebody, but you are taking the entire rent in black, that is in cash, and you are not showing it to us so that you don't need to pay the tax on that. It is your black money. And hence, what government assume, if you say any property is vacated throughout the year, it is called as DLOP. What is DLOP? Deemed let out property. Government will assume that it is let out property. Government will understand that you are getting a rent. They will estimate one estimated rent, approximate rent, and that rental income will be taxable to you in the name of deemed let out property. Achha, further one more point. There is one more case also of deemed LOP. What government is saying that any person can have maximum two self-occupied property. Any person can maximum have two self-occupied property. So if let's say there is a person called Mr. A. In Chennai, he has one property in which he himself is staying. In Bangalore, he has one another property in which parents are staying. In Hyderabad, he has one third property in which brother sister is staying. So basically, can I say he has three self-occupied property? Government said not possible. Any person can have maximum two properties SOP. If you have three property called SOP, any two will be called as SOP, one will be assumed as deemed LOP. And you have to calculate a notional rent and you have to pay tax on that. Even though it is used for staying purpose, still government will assume that you are getting some rental income. How to calculate that we'll understand in future. So there are two kind of deemed LOP. One, if you have the property which is vacated throughout the year, it is called as deemed LOP. Second, if you have more than two SOP, up to two it will be called as SOP. Balance property will be called as what? Deemed let out property. So there are three types of house property which can exist. One, in which you or your family is staying, self-occupied property, SOP. Second, the property which is given on a rent, let out property, LOP. Third, which is totally vacated throughout the year, is called as deemed let out property, DLOP. या तो if you have more than 2 SOP, up to 2 SOP it is called as SOP. Balance SOP will be called as what? Deemed let out property, that is DLOP. These are the valid short form. SOP, LOP, DLOP, these are the valid short form. Now, please understand, I'm giving you some example and you need to tell me what I will call that property. Let's say I have only one property which I'm using it for my staying purpose. What name I will give? SOP. Okay. I have only one property which is given on a rent. What I will call it? LOP, let out property. Okay. I have one property which is vacated throughout the year. What I will call this? Deemed let out property. Okay. I have three properties. In the two property, me or my family is staying and one property is given on a rent. Tell me what I will call these properties. Can I say the two property will be called as SOP and one which is already given on rent will be called as let out property? Okay. Let's say I have three property, all of which are given on a rent. What I will call them? Okay, all the three will be called as let out property. I have two property. One, I'm staying within that. One is totally vacated throughout the year. Tell me what I will call this property. Can I say one in which I'm staying is called as SOP, one which is totally vacated is called as deemed let out property. Okay. I have three property, all of which are used for my staying purpose. What I will call this? Two property will be called as SOP, one property will be called as deemed let out property. Are you understanding this different kind of combination? Acha, one more. Let's say I have two property. One is given on a rent. One is totally vacated throughout the year. Tell me what I will call this property. One which is given on a rent is called as LOP. One which is totally vacated is called as deemed let out property. This is how I have to give names to the property. Achha, many of you can be saying na that sir, here more combinations are also possible. Let's say there is one house property. Ground floor is used for residential purpose. Second floor is used for commercial purpose. Business is being done. Ground floor people are staying. First floor is given on a rent. All this permutation combination is possible and that is covered within this chapter later on. As of now, we are understanding simple things that if entire property is SOP, then what? Entire property LOP, then what? Achha, later on, we'll understand all the permutation combination also. The sequence of ICI module will not match with the sequence of my notes so far as house property chapter is concerned. I have transferred it to the most logical manner. And hence, first this entire chapter is to be done as per my notes. And then if you have a habit of reading module, then only you can read the module once the entire chapter is being finished. Acha sir, is it required? The answer is no. If you are referring my notes, 100% module content is covered. You are not supposed to refer it afterwards because all the question answers are also covered in this question book. So you are not supposed to double invest your time, but it is okay. Somebody has a habit of reading the module. Otherwise, they not feel good, na. So that is okay. I'm not restricting anyone. It is a good habit. But okay, if you are not reading the module, then also it's fine because 100% coverage is done in my notes. So I have given over here three types of house property. First is let out property, LOP, the one which is given on rent. Then self-occupied property, SOP, the one in which you or your family is staying. Third one is called as deemed let out property, DLOP, which is not SOP, not LOP. Into bracket note down for full 12 month. Vacated for full 12 month is called as deemed LOP. Acha, cancel the word also. Note down or. If a person has more than two SOP, any two will be called as SOP, balance will be called as deemed LOP. Refer this once, then we'll move forward. Refer this once. Once we decided that this property is house property or not, then we have decided which kind of property it is. Now we have to determine how to calculate income of house property. Now we are going to see the structure of calculation. This is a statutory structure. We cannot change it. Income Tax Act has given the structure of calculating income from house property. Any of the answer of this chapter is always covered by 5 steps. And you need to calculate just this 5 steps. Once this 5 step is done, your calculation is done. It is a simple chapter of 5 steps. Let us understand first of all overall what is the structure all about, and then we'll understand each and every step individually. So first I'm telling you the entire structure, overview of entire structure, and then we'll understand one by one each and every step. Acha, tell me, I asked you earlier also, again asking you, if I'm having a business, then what is taxable? Sales taxable or net profit taxable? Can I say net profit is taxable? Means income minus expense. Similarly, so far as house property income is concerned, the rental income itself is not taxable. It is the gross income. From that, expenditure is also to be deducted, and the balance net surplus is taxable. The rental income which you are getting on a yearly basis is a gross amount. That gross amount which you are getting on a yearly basis is called as gross annual value. What it is called as gross annual value, in short GAV. So the rental income which we receive every year on a gross basis is called as gross annual value, in short GAV. This calculation is to be done on a yearly basis. Now, if you have a house property, to the state government, you have to pay a particular tax called property tax, municipal tax. It is covered under state list. We have seen in the first lecture. Can I say if I have a house property in, let's say, Gujarat, then I'm paying some kind of tax to Gujarat government. This is called municipal tax. And this municipal tax is my one kind of expenditure. Then this expense has to be deducted while calculating the income, because this is like a direct expense. So from the gross annual value, what I'm deducting? Municipal tax paid by owner during the previous year. Acha, during the previous year means, can I say last year they are talking about? No, previous year means current financial year. So what I will deduct from GAV? Municipal tax paid by owner during the previous year. If something you deduct from gross, can I say you always find the answer which is net? So the remaining amount is called as net annual value. In short, it is called as NAV. All these points we'll see one by one individually also. As of now, I am just giving you an overview. Acha, from the net annual value, I will get two further deductions. Acha, when I use the word, I will get deduction, does it mean that government will give me back this money that I pay municipal tax to state government? And if I'm saying that I will have the deduction, I will get the deduction, means whether I will get back that money? No. Huh? What is the meaning of getting the deduction? I will claim that expenditure from my income. I will deduct that expenditure from my income. So my taxable income is reduced. So my ultimately tax is reduced. Are you understanding? So from net annual value, two deductions are allowed. Both the deductions are given under section 24. And hence from net annual value, what I have deducted, deduction under section 24. Clause A, clause B. So you cannot write down point number 1, point number 2. No, it is clauses. 24 clause A, 24 clause B. What is 24 clause A? See what government says. If we give you the option to deduct each and every expenses of your house property, then you will claim all the expense, repair expense, sweeping expense, lighting expense, your depreciation expense, maintenance expense, fire expense. Acha, you will claim those expenses also which are actually not incurred by creating fake evidences. Who will have track on all this? Better, we will not give you any deduction. We'll assume that you must be having 30% expense. And by assuming this, we will give you a standard deduction. which is 30% of your NAV. So let's say my NAV is rupees 1 lakh. I will get fixed deduction of 30,000. What if I tell you that, sir, my expense is only 20%? Still, you will get 30% deduction. What if I tell you that my expense is 50%? Still, you will get only 30%. This is the standard deduction. It don't have any linkage with your actual expenditure. It is a standard deduction. That's what we saw in residential chapter also. From rental income, deduct 30% standard deduction. It was that only. 24 clause A. 30% of NAV. Acha, second, if I don't have a house property, I will purchase the same. If I don't have the money, can I say I will take a housing loan? Every year on this housing loan, I will pay the interest. So the second deduction over here, 24 clause B, interest on borrowed capital. That is interest on that housing loan. And the balance is called as income from house property. So tell me, what is the structure? GAV, that is gross annual value, minus municipal tax paid by owner during the previous year. So we will get net annual value, NAV, minus deduction under section 24. Clause A, 30% of NAV. Clause B, interest on borrowed capital. The balance amount is called as income from house property, which will be added to my gross total income. Refer this structure once. Refer it once. So let us have the structure once again. Let us revise the structure once again. Then we'll go one by one each and every step. Gross annual value GAV minus municipal tax paid by owner during the previous year. So we will get net annual value, that is NAV, minus deduction under section 24. Clause A, 30% of NAV. Clause B, interest on borrowed capital. Balance will be called as income from house property. Now, let us understand what is the meaning of gross annual value. How to calculate gross annual value? There are three kind of house property: SOP, LOP, deemed LOP. As of now, whatever I am explaining to you, please understand, I am explaining on a basis of LOP, that is let out property. Forget about SOP, forget about deemed LOP. As of now, we are learning about which property? Let out property, LOP. What we are understanding as of now? How to calculate gross annual value, that is how to calculate GAV. I said whatever rental income I receive on an annual basis is called as GAV. So does it mean that my rental income is equal to gross annual value? And if it is the case, why they have written the wordings like gross annual value? They would have written the wording like rental income. They have not written the wording rental income. Now what they have written? Gross annual value. Means there is something called as difference. There is something called as difference between these two. Let us understand that what is the meaning of gross annual value. It is the simple three steps that you need to follow. Three steps. And these three steps are called as gross annual value. Now, what are the three steps? Step 1, municipal value or fair rent, whichever is higher. Step 2, step 1 or standard rent, whichever is lower. And whatever you will get by doing this, whichever is lower, is called as expected rent. And what is step 3? Expected rent or actual rent, whichever is higher. See how simple it is, na? Higher, lower, higher. Municipal value or fair rent, whichever is higher. That amount of fair standard rent, whichever is lower. That is called as expected rent. Expected rent or actual rent, whichever is higher. Simple, higher, lower, higher. Understood? What understood? What you understood in this? Let us understand what is this higher, lower, higher? What is this municipal value? What is this fair rent? Everything we need to understand now. Okay. Whatever I'm explaining now, please understand it so that you will understand the flow, that how government has written this kind of provision. Let's say I have a house property and I have given it on a rent. So basically, can I say this is a let out property for me? Now the rental income is decided 20,000 per month. But what I have told to my tenant, you don't give me 20,000 on a bank, because if you will give me 20,000 in my bank, it will be fully to be disclosed to the government. I don't want to pay tax on such a heavy income. What my tenant will do now, he will give me 15,000 per month through bank account, and balance 5,000 per month he will give me in cash, black money. So that what I will disclose to the government, that I have received only 15,000 rupees from bank, and only that much is my rent. What rent I am showing to the government, that this is my rental income, is called as AR. AR means actual rent. Okay, my actual rent is 15,000 per month. That's what I'm saying to government. Now government said, we also know na that you will do like this. You will take some amount through bank, some amount you will receive in cash, so that you don't have to pay tax on that. We cannot put total faith on you. Now what government will do? Government said, we will also determine that what should be the ethical rental income of your premise. What should be the actual rent of your premise, that government will also determine based on their parameters. Whatever rent government will determine that, okay, this should be your ethical rent. This is called government's expectation, that government is expecting from you this much minimum rent. It is called as ER. ER means expected rent. Expected rent means the rent which is as per government for your property. Now let's say, as per the expectation of government, my property should fetch a rent of 18,000 per month. How much I am showing to government? 15,000 per month. How much government is expecting from me? 18,000 per month. So finally tell me, what will be my gross annual value? How much I have to disclose? Government said simple, you can't break our expectation. You can't hurt our expectation. So finally, what will be my gross annual value? Actual rent or expected rent, whichever is higher. That is 18,000 per month. And that was the third step. Expected rent or actual rent, whichever is higher. Acha, tell me, if as per government, expected rent is 17,000 per month, and as per me, my actual rent is 20,000 per month, what government will tell me? Don't show 20,000. Now, our expectation is only 17,000. Let's keep your rent up to 17,000 only. Is it what government will tell to me? No, what government will tell me? We to just decide as say your rent is actual rent. Now, you have to disclose at least that much. And that's why the last step is very clever. It says expected rent or actual rent, whichever is higher. Are you understanding this? But now the question arises, how government has decided this expected rent? How government will come to know that how much rent my property could fetch? Because that is what ER is all about. So how to know that what is my expected rent? Now government has three parameters for that. Government has three things to decide expected rent. First parameter, what government will use is municipal rent या तो municipal value. What government will use? Municipal rent या तो municipal value. What is municipal rent या municipal value? See, we just discussed that state government charge municipal tax for the property, and every year you have to pay a municipal tax to the state government. This municipal tax is generally in a percentage, like let's say for my house, municipal tax is 9%. 9% of what? Of which amount 9% I will pay every year? Then understand, state government, area wise, they decide that what should be the ethical rental income of that particular area. So if it is area X, let's say we talk about Chennai and we talk about the area called Nungambakkam, then Tamil Nadu government may determine that if there is any 2 BHK flat in Nungambakkam, then this much should be the rental income. And on that rental income, Tamil Nadu government will charge 9%, which will be municipal tax. The rental income which state government has decided is called as municipal rent. Municipal rent or municipal value. And on this municipal rent or municipal value, they charge municipal tax. So basically the first parameter that income tax department will use to determine expected rent is municipal rent. It is the rent which is decided by state government, and based on this, they charge municipal tax. Let's say my property has a municipal value, that is municipal rent, 20,000 per month. Now, whenever I have a property and I want to give it on a rent, what will I do? Will I just see the municipal value and I will give that property on a rent on 20,000 per month? No. What I will see, if in my neighbor there is one similar property and my neighbor has also given it on a rent, how much my neighbor is charging. If the similar kind of property is there in the similar area, what is the rent going on for that property? That is called as fair rent. That is basically the rent which is going on in the market. Fair rent. Now let's say the fair rent which is going on in the market is 21,000 per month. So the municipal rent is 20,000, the fair rent is 21,000. Ultimately, what do you think? How much rent I will charge from my tenant? How much rent I will charge from my tenant? Will I charge 20,000 or will I charge 21,000? What do you think? What should be the income tax department be expecting from me? Can I say I will charge obviously which is going on in the market, which is higher, 21,000? And that's why the first step says that municipal rent or fair rent, whichever is higher, that comes to 21,000. Municipal rent or fair rent, whichever is higher. So now what is the third parameter? That is called as SR. That is called as standard rent. Standard rent. What is standard rent? There is one act in our country which is called as Rent Control Act. Very few people know about this. Rent Control Act means, now this act will decide for each and every area maximum rent that an owner can collect legally from the tenant, so that a owner will not ask much rent from the tenant, owner will not exploit the tenant. And to have a regulated tenancy, the Rent Control Act says that we will decide for each and every area that what should be the maximum rent. This maximum rent is called as standard rent. If owner charges over and above this, he may go to the jail also. So basically standard rent is the maximum rent that the owner can charge from the tenant. Now let's say for my property, central government has decided the maximum rent, that is standard rent, of rupees 19,000. Yani I cannot charge more than 19,000 per month, and if I charge that, I will go in jail. Tell me, as per step 1, municipal rent or fair rent, whichever is higher, it was 21,000. But the standard rent of this property is 19,000. What central government will be expecting from me? What expectation central government will have? Will central government expect now 21,000 or maximum 19,000? Can I say maximum 19,000? Because this is the maximum rent. And hence what step 2 says? Step 1 or standard rent, whichever is lower. Step 2 or standard rent, whichever is lower, because this is the maximum rent a owner can charge. And that whichever is lower is called as ER. ER bole to expected rent. So tell me how government has decided this expected rent. Municipal rent or fair rent, whichever is higher, that amount of standard rent, whichever is lower. You have to remember this only. Whatever I told you is just a story behind this higher lower. You have to remember the provision which I have given over here. Simple, higher, lower, higher. Acha, but tell me, as per income tax department, my expected rent is now 19,000. Expected rent is 19,000. But what if I'm actually charging 21,000? Then how much will become my gross annual value? Can I say expected rent or actual rent, whichever is higher? That is the third step. And as per the third step, what will be my gross annual value? 21,000. In your mind, you will get a question. That's if the standard rent is 19,000, how a person can legally charge 21,000? I agree. He cannot charge it. Okay. Tell me, if you are staying on a rental basis at your house, do you know that there is any maximum rent? Half of the population, rather 90% of the population of this country don't know that there is also one law which determines the maximum rent. So it may be possible that in ignorance of that law, I am charging the rent which is higher than standard rent. I have to pay income tax on that. Acha, forget about this. You may say that, sir, this is illegal, na? Okay, forget about this. Let's say I have a business. After my teaching is done, I take my eco car and I go on a road, and whosoever is walking on the road na, as a student or so, I just pick up in my eco. I have kept two kidnappers also, and I will ask 10 lakh rupees or 20 lakh rupees of ransom. So that I can send that person to his home. Ransom, kidnapping income. I get 20 lakh rupees of kidnapping income. And for doing this kidnapping, I have an eco car, I have two kidnappers to whom salary is being paid, I have that knife and all. And all that expenditure comes to, let's say, 2 lakh rupees. So 20 lakh is my income, 2 lakh is my expense, 19 lakh is my net profit. And I'm such a genuine taxpayer that I want to pay tax on this 19 lakh rupees. Will income tax department will say, no, 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 this is illegal income. How we can tax the same? What income tax department will say? Okay, if you are ready to pay the tax, we are ready to accept the tax. Even though it is illegal, but it is your business, na? This is also a PGBP income. Supreme Court judgment. Illegal business is also income. Income tax is applicable. Apply the same rule over here. Though this 21,000 looks illegal, but it is an income, and hence Income Tax Act is applicable. Now, whatever steps will be taken against you, it may be under Rent Control Act. In income tax, there is no wrong steps that will be taken. It is simply whichever is higher. One more thing. In real life, we don't do all this. In real life, actual rent means gross annual value. Actual rent means gross annual value. If income tax department has a doubt that no, this is not gross annual value, then income tax officer will calculate this municipal rent, fair rent, standard rent. He will do whichever is higher, whichever is lower. He will find expected rent. He will do expected rent and actual rent, whichever is higher. I will just say that as per me, my actual rent is GAV. All this hard work, income tax officer will do in real life. I'm not supposed to do it. In exam, obviously, we are supposed to do it. So what we have to remember ultimately, municipal rent or fair rent, whichever is higher, that amount of standard rent, whichever is lower, that is called as expected rent. Expected rent or actual rent, whichever is higher. Tell me one more thing over here. I have a house property which I have given it on a rent for 12 months. So the rent which is accrued is of 12 months for the year 24-25. But tenant has paid the rent of 11 months for the last March month. He will pay me the rent in the next year ka April. So basically he will pay me the rent in April 2025. So accrued rent is of 12 month, received only 11 month. Tell me, while calculating actual rent, how much month ka rent I will consider? Is it of 12 month or 11 month? How much month ka rent I will consider? Is it 12 month or 11 month? Then remember, house property income is taxable as per accrual basis. And how much has accrued? 12 month. Then how much actual rent will be taken? 12 month. Similarly, let's say, while calculating my actual rent, my accrual is of 12 month, but I have received 1 month in advance, which belongs to next year. So received is 13 month. How many month ka actual rent I will take? 12 month or 13 month? 12 month, because it is to be calculated on accrual basis. Many times, let's say today, I have given my property on a rent to somebody and the rent is decided 20,000 per month. Along with that, I will charge 1 lakh rupees as a security deposit. So if after 2 years there is nothing wrong or no damages in my house and the tenancy is getting over, I will return this 1 lakh rupees to my tenant. And if there is any damage in my house, I will set off that damages against this deposit. Balance will be paid back to that tenant. Tell me, while calculating this actual rent, whether this 1 lakh rupees of security deposit to be added or not to be added. Not to be added. Because this is not my income, it is just a deposit. I have to give back to the tenant. It is just a security deposit. It is not my income. That all things I have written over here. First of all, actual rent I have written over here, due basis या तो receivable. अच्छा, meanings I have written. Municipal value for collecting tax, that is municipal tax. Government made valuation of a property which is called as municipal value. अच्छा, fair rent. The rent which is fetched by similar property in same या तो similar locality. Standard rent. It is the maximum rent that can be legally recovered from any tenant as per Rent Control Act. Actual rent is always taken on a due basis. Advance rent not to be considered. Refundable deposit not to be considered. Just read this entire thing once, then we'll refer illustration number 1. Okay, guys. So first of all, we understood that what is called as the house property. What is called as house property? If we revise that 3 conditions, then house property means there has to be a building or land appurtenant thereto. Assessee should be owner of the property. Property should not be occupied for the purpose of own business or profession. Once you decide that any property is a house property, then particularly you need to decide that which kind of house property it is. If the property is used for your staying purpose, SOP, self-occupied property. If it is used for the rental purpose, let out property, LOP. If you don't use it at all for full 12 months, it is called as deemed let out, DLOP. And if you have more than 2 SOP, up to 2 it is called as SOP, balance property is called as deemed LOP. Then we saw the structure of calculation. Gross annual value minus municipal tax paid by owner during the previous year, so net annual value minus deduction under section 24. Clause A, 30% of NAV. Clause B, interest on borrowed capital. The balance is called as income from house property. Then we saw what is the meaning of gross annual value. Municipal value or fair rent, whichever is higher. That amount or standard rent, whichever is lower, that is called as expected rent. Expected rent or actual rent, whichever is higher. Achha, based on this, let us refer now illustration number 1. Okay. Illustration number 1. Jayshree owns 5 houses in India, all of which are let out. Compute GAV of each house from the information given below. For all the 5 houses, they have given 4 kind of value: municipal value, fair rent, standard rent, actual rent. Received is equal to receivable. Tell me one thing. Tell me one thing. If I have 5 houses and all the values of 5 houses are given separately, whether I need to combine them all and then do whichever is higher, lower, higher, or I have to calculate GAV of every house separately. The income to be calculated for every house separately or combined for all the houses. Let me tell you, the value of every house to be computed separately. And then whatever is the final income from house property, that you need to merge. You can't compute GAV combinedly. You have to calculate it separately. First, let us discuss about house 1. Municipal value is 80,000. Fair rent is 90,000. So what is step 1? Municipal rent or fair rent, whichever is higher, that will become 90,000. Acha, then what is given? Standard rent. But as you can see, it is not applicable. Means the rental value, standard rent of this property is not available. If it is not available, then I have 2 options. And you need to tell me which option is correct. If any information is not given, I will ignore the step and I will move forward. Second, if any step is not applicable, I will assume it as 0. Tell me which step I will use. Will I ignore the step or will I assume it as 0? If I assume it as a 0, then it will create a blunder. Let's say step 1 90,000. Step 2 says 90,000 or 0, whichever is lower, 0. That means you want to say there is no expectation of government. ER is 0. It cannot be possible. And that's why if any step is not given, you simply ignore the step. Your earlier step will become the answer of this step. So here, if standard rent is not available, can I say my step 1 will become expected rent? So here expected rent is 90,000. And finally, my actual rent is 72,000. So expected rent or actual rent, whichever is higher. So can I say my gross annual value will be what? 90,000. Solve the 4 houses ka GAV and then we'll discuss one by one. First of all, you solve it. What will be GAV of every house? Achha, house 2. Municipal value 55,000, fair rent 60,000, whichever is higher 60,000. That amount of standard rent 75,000, whichever is lower 60,000. So my expected rent comes to 60,000. That amount of actual rent 72,000, whichever is higher 72,000. So GAV comes to 72,000. House 3. Municipal value or fair rent. Can I say both are equal? So whichever is higher comes to 65,000. That amount of standard rent 58,000. Whichever is lower 58,000. So basically here, whichever is lower 58,000, my expected rent will be 58,000. That amount of actual rent 60,000. Whichever is higher 60,000. My gross annual value comes to 60,000. Then house number 4. Municipal value 24,000. Fair rent is 25,000. Whichever is higher, can I say whichever is higher comes to 25,000? That amount of standard rent not applicable. So expected rent will come to 25,000. That amount of actual rent 30,000. Whichever is higher, 30,000. My GAV will come to 30,000. Last, house number 5. 80 or 75, whichever is higher, 80,000. That amount of standard rent, whichever is lower, 78,000. So my expected rent comes to 78. That amount of actual rent, whichever is higher, 78,000. GAV comes to 78,000. Are you understanding this? And is it a monthly basis? No, this is yearly figures. We have to calculate all the things in yearly figures always. So that is what simply you have to do: higher, lower, higher. But there are two more, masala on this particular calculation, two flavors in this calculation. This was a simple one. You are assuming that your property is rented for full 12 months and you are going to get the rent of full 12 months. There is no bad debt. What if I add a concept of bad debt? That let's say I have given a property on a rent for full 12 months. My tenant is there who is staying in the property for full 12 months. He paid me a rent of 11 months, but the last month, March, rent accrued. I went in March month to take the rent. He said, sir, please come in April month. I will for sure give you the rent. I went in April month. He said, sir, please come to the May month. I will give you rent in the May month. I went in the May month to collect the rent. He said, sir, please come to June month. In June month, surely I will give you the rent of that March month. In June month, I went to the tenant. I asked him, where is my rent? He said, sir, sorry. Please come to July. I said, you please get out. Now I know that you don't want to pay the rent. He can't pay me the rent of March month. So meaning thereby full 12-month rent accrued. But I will receive only 11 month. March month ka rent becomes bad debt. The rent which is accrued but not receivable is called as unrealized rent. It is called as what? Unrealized rent. Unrealized rent means a rent which is accrued but you could not realize. Now, what to do with unrealized rent? See, what government is saying, one line you have to remember, it will solve so many problems. Government will never reduce its expectation. Government will always keep it expected rent of 12 months. Government said, if you say na that for one day also we have given a property on a rent, the expectation of government will be built up for 12 months. And that's why expected rent can never be less than 12 months. It will be always of 12 months. Now you received your rent, you don't receive your rent, your tenant is bankrupt, it is all your problem. Government key expectation will always be of how much month? 12 month. So here ER is of 12 month. So what to do with that bad debt? What to do with that unrealized rent? Government said, okay, you must find out your actual rent. Earlier your actual rent was of 12 month. Now from that 12 month, you reduce your unrealized rent. So let's say 1 month rent was unrealized. Now my actual rent will become 11 month. So I will compare 12 month ka expected rent with 11 month ka actual rent, and finally whichever is higher will become my GAV. But sir, this is wrong na, correct? Then you become prime minister, make me finance minister, I will do necessary changes. Up to then, this is the provision that unrealized rent is to be reduced from actual rent. It is not to be reduced from expected rent. Expected rent is always of 12 months. And with that, you compare with your actual rent. Whichever is higher will become your GAV. See what I have written. First step and second step as it is. Into bracket note down. That is, ER will always be of 12 months. And in the third step, what you will do? Actual rent is equal to annual rent minus unrealized rent. And finally, whichever is higher will become gross annual value. Now, before I go to the example, whether any rent that I could not realize is called as unrealized rent, then what I will do now? Simple. If 12 months I have given a property on a rent, 2 month ka rent I will collect in cash. And what I will tell to the government, this 2 month is unrealized rent. That is to be reduced from actual rent. Then only 10 month will be taken. But in this manner, to each and every person will show unrealized rent. Government will say no. First you prove that this is a real bad debt. If you prove that this is real bad debt, then only we will allow it to be reduced from actual rent. If you don't prove it, your actual rent will also be of 12 months. You can't reduce that unrealized rent. We need to fulfill three conditions. These three conditions are given in Rule 4 of Income Tax Rules 1962. If you fulfill these three conditions, then only the rent which you could not realize becomes your unrealized rent. First condition, tell me one thing. If a tenant is not paying me rent, whether he is my son-in-law, that I will keep him in my premise? No. Can I say I will make him vacate the same? I will have one more tenant who will pay me sufficient rent now. So the first condition, tenant has vacated the premise or steps have been taken to make him vacate. Acha, if the tenant is not paying me any rent, can I say I will start some legal proceedings, some FIR, some police complaint so that at least he can pay me the rent? Legal proceedings should have been started to recover the rent. Acha, let's say I have given my property on a rent to Mr. A. Now, it was my unfortunate thing that my two properties were there. One was my house, one was my office. Both the premise I have given on a rent to the same person. Now he is not paying me rent of house. So I will I will make him vacate only house or I will make him vacate both the property. Can I say both the property? Because I have a fear that if he is not paying me the rent of house, tomorrow he will not pay me the rent of office also. So the third condition says that tenant is not in occupancy of any other property of the same owner. See, what are the three conditions to fulfill to call any rent unrealized rent? Tenant has vacated the premise or steps have been taken to make him vacate. Legal proceedings started to recover the rent. Tenant is not in occupancy of any other property of the same tenant, of the same owner. If these three conditions are fulfilled, then your rent can be termed as unrealized rent. Then only it can be reduced from actual rent. What if these conditions are not fulfilled? I will take actual rent of 12 months without reducing unrealized rent. What if in the question it is not given that whether the condition is satisfied or not? What you will assume? Always assume the condition satisfied and always reduce that unrealized rent from actual rent. Acha, what if in the question it is written unrealized rent is there but rule for condition not satisfied? Then you will not reduce it from actual rent. You will take your actual rent of 12 months. Are you understanding this? Now see the question I have written over here. Mr. A gives the property on a rent to Mr. B for 10,000 per month. So this becomes actual rent. Municipal value is 1 lakh per annum. Fair rent is 8,000 per month. Standard rent is 40,000 for 6 months. Unrealized rent from Mr. B were for the month of February and March. Means 2 month ka rent is not realized. And let's assume rule 4 ki condition is satisfied. Calculate gross annual value. Calculate. Achha, first convert all the things into annual figures because we need to calculate GAV on an annual basis. Tell me what will be my GAV in this example. So can I say first of all, I have to write about municipal rent. What will be my municipal rent? It is 1 lakh per annum. So this will be 1 lakh. Then we have to write about fair rent, 8,000 per month. So yearly it will be 96,000. Whichever is higher, it will be 1 lakh. Acha, standard rent for 6 months it is 40,000. So what will be for yearly? Can I say 80,000? So ultimately step 2 says whichever is lower, this will become expected rent, 80,000. Now what will be my actual rent? Can I say it is 10,000 per month? So yearly it is 1 lakh 20,000. But 2 month ka rent is unrealized rent, which is to be reduced from actual rent. So 2 month ka rent becomes 20,000 that I will reduce. My actual rent will come to 1 lakh. Finally, my GAV will be whichever is higher. That will be how much? 1 lakh. Are you understanding this? Now see, what I said, whenever any unrealized rent is given, that is UR, unrealized rent, expected rent will not be affected. It is always of 12 month. But can I say while calculating actual rent, it will be annual rent minus unrealized rent. And then finally you have to do whichever is higher. So many cases can say that, sir, this is actually wrong. How you can compare tiger with a cat and you can see whosoever is stronger? This is always of 12 month. This is of lower month. Whichever is higher will always be ER. This is wrong. Government said, chill, bro. If you have any problem, we'll give you an alternate solution. Either you follow this, that deduct unrealized rent from actual rent, or alternatively, what second method you can follow, your ER will be of 12 month, your actual rent will also be of 12 month. First do whichever is higher, and that whatever is whichever is higher, from that you deduct unrealized rent so that you actually get the benefit. This is the second method. Those who are comfortable with first can follow the first. Those who are comfortable with second method can follow the second method. What is the second method? ER also 12 month, AR also 12 month, do whichever is higher. From that you deduct unrealized rent. This gives actual benefit. In real life, we'll follow this only. In exam, we can follow any one of them. Both are correct. ICI follow both the same. But what generally ICI do? They follow this first view in the main answer and this they write as a note. So what we will do in our exam, compulsory we will follow the first view that deduct unrealized rent from actual rent. Now understand, by both the method, it may be possible that your answer differ, but it is okay. Still you will awarded the marks because both the method is prescribed by government. See, many at times the method can, by both the method answer can remain same. Many at times it can differ. Both the things are possible. Let's take this view over here. This is as per the first method. Let's apply second method. Can I say expected rent also full year? Now take AR also full year, that is 1,20,000. Do whichever is higher, 1,20,000. From that you deduct your unrealized rent, that is 20,000. Can I say answer will remain 1 lakh? Here coincidentally the answer remains same, but it may differ also. But still it is okay. You will be awarded the marks. But what we will follow in our examination, this view. We will reduce unrealized rent from actual rent. Are you clear about this? Okay. This was the first concept, that is unrealized rent. Let us refer whatever we have done up to now so far as house property chapter is concerned. First we studied about section 22. If three conditions are fulfilled, any property is called as house property. That should be a building or land appurtenant thereto. Assessee should be owner of the property. Property should not be utilized for the purpose of own business or profession. So any vacant land either will go under PGBP or IFOS. Subletting will always go under IFOS. If my main business is to sell the property, rent will go under house property. If my business is to give the properties on a rent, and if it is related to commercial property, PGBP, residential property, house property. If a property is a house property, then decide which kind of house property it is. If it is used for your staying purpose, self-occupied property. If you are giving it on a rent, let out property. If you are doing nothing for the entire year, deemed let out property. Acha, if there are more than 2 SOP, up to 2 SOP, balance will be called as deemed LOP. What is the structure of calculating house property? Gross annual value minus municipal tax paid by owner during the previous year, net annual value, minus deduction under section 24, clause A, 30% of NAV, clause B, interest on borrowed capital. The balance is called as income from house property. First, let us understand how to calculate GAV, that is gross annual value for a let out property, section 23. Municipal value or fair rent, whichever is higher, that amount or standard rent, whichever is lower, that is called as expected rent. Expected rent or actual rent, whichever is higher. This actual rent is to be taken on an accrual basis, wherein refundable deposit is not to be added. If any rent accrued but not receivable, it is called as unrealized rent, subject to the three condition of rule 4. And if unrealized rent is there in the question, expected rent will be of 12 month, Unrealized rent will be reduced from actual rent, and finally, whichever is higher will become your GAV. Are you understanding up to this? So many things to discuss further, so many things to continue further. First, you revise whatever we have done up to now. Homework section, question answers up to 3 chapters. I will upload on the dashboard of BB Virtuals. You can find over there. You start that homework section of second chapter. You revise whatever done in this third chapter and then come to tomorrow's lecture. We'll again meet on the same platform tomorrow at 3 o'clock. Thank you so much, guys. Bye-bye.